Michael Farr, let me begin with you. You say that the market is bubbly, but not in a bubble. What's the distinction there?
Bubble is one of those runaway things, Tyler. And if you forget the names of the guests today, you're in real trouble with the two Michaels here. That's a test, Tyler. So we've seen elevation, and have we really gotten to the point where we're seeing a bubble form in AI? Every time we've seen these bubbles, we've had a whole lot of leverage in the market. Kind of runs counter to the idea that there's $7 trillion in money market right now. So we're looking for leverage. Prices feel inflated, but they don't feel ridiculous. And everybody's not on the same side of the bullish boat. That's always another bad sign. So I think we're moving that way, but not there quite yet. Reason to be worried, but not overly so.
How do you see it, Michael Cuggino? Not ridiculous, but fully priced. Where are you on that spectrum?
Yeah, not only do we have the same name, but we probably have a similar viewpoint. Certainly stocks are elevated, but not unnecessarily so, given the macro story. The Fed is likely done. They just came out saying they're probably going to cut. Corporate earnings have held up. There's a lot of liquidity on the sidelines. People are working and spending. It's hard to see a negative. It's almost a perfect storm for equities to continue to bleed up right now. There are some headwinds out there, but the impact of those are being way overweighted by the positives at the moment.
So, Michael, you say that we'll probably pierce 40,000 at some point, probably have a correction at some point here, a pullback, and eventually motor forward up to 100,000. I want you to give me the date and time that we're going to be at 100,000.
I mean, it's in your inbox, Tyler. Okay. Just take a look for that. You know, when you take a look at where we are, this is math and the rule of 72 and compounding. So if the market doubles every 10 years, 15 years from now, we ought to be at 100,000. That's it. That's just the math. If we do 7.5% return on the Dow Jones Industrial Average. So I think 40,000 is on the way here. Clearly doesn't look like it's going to happen today. Next week would not be a surprise. It's not going to be that important in terms of the percentage change of your portfolio, but it's really important in that it is a great vindication and a great endorsement of the American economy, of capitalism in general, that this is the place that is the shining city on the hill where capital formation can happen, where property laws and contract laws are regarded and respected, and the American dream happens here. Every time we hit one of these levels, we all ought to put flags out in front of our houses and celebrate. This is why you watch CNBC. You understand that really the heart of America and our economy and economic growth is what keeps the American dream alive. CNBC covers it every day.